On today's episode, we are going to take a look at Activision. They are down about a little bit over 2% after reporting earnings. So, in today's episode, I'm going to break it down in the following. First, we're going to take a look at their earnings results. Just some quick points. Then we're going to do a little more in depth on some of their financial documents, mainly the balance sheet, see if there's any big changes there. And then finally, I'm just going to give my overall thoughts on the company, if I'm going to buy, if I'm going to sell, or what would I do with Activision. To say the least, Activision right now is one of my favorite video game companies. It's also one of my favorite esports stocks, and I consider them two different genres right now. And Activision hits both those marks. And finally, if you are new to my channel, if you are a long-term investor, if you want to learn about growth stocks, make sure to hit that subscribe button. And to all my returning viewers, thank you so much for the support. Like always, make sure to hit the thumbs up. If you guys want to get in contact with me, feel free to post on the YouTube comments. I'm very responsive there, but I'm also active on my Twitter. I do have a Discord channel, which is free to anybody, and a weekly newsletter at josenaharo.com. Make sure to check that out. But remember, all of this is free information. None of this should be taken as advice. I am by no means a professional, so make sure to talk to a financial advisor before doing any form of investing. All right, so let's start off by taking a look at Activision's price performance. And in the past 6 months, this company has returned great returns to investors at about 40% since 6 months ago, which was February 6th. And taking a look year to date, we're about to see probably a similar results, about 44%. In the past 5 years, Activision has returned 192% to investors. And one thing we can see is Activision right now is being helped out due to the whole stay working at home, the whole people being locked down type market. So more people are moving into playing games, and Activision has taken a very, very strong portion of this. On today's episode, we are going to take a look also in their earnings call. Some analysts ask similar questions of how do you think this growth is going to continue as things continue to open up? All right, so let's start off with the simple earnings results. So they reported earnings August 4th of 2020, and this was for quarter 2 of 2020. And they did beat both earnings per share and revenue. GAAP earnings per share were 75 cents, which beat expectations by 16 cents. Revenue was $2.08 billion, and that's up 72% compared to the same time last year, and beat estimation by $380 million. We can see by that huge revenue growth, right? We're not seeing much companies seeing that type of growth right now. Even big growers, we're only seeing about 20-30%. So a revenue growth of over 70% in compared to the same time last year is pretty impressive. And we're going to take a look at one of my main reasons for liking Activision is just the overall way management decided to change things about a year ago. So I'm not sure if it was a year or 2 years ago. I've been following Activision for some time. They kind of at some point they were trying to get into every single market. They were trying to get into everything. Activision their leadership was like, hold on, let's slow down and let's focus on our strong franchises, whichever. Let's focus on whatever we're strong at and let's double down on those. And that to me is great business, right? If you know you're strong in one certain aspect of an element and certain one part of aspect in the market, I would prefer for you to continue to double down in whatever you're strong at and continue to grab that growth. And that's what Activision did. So I'm very cool. I'm very happy to see that. Their quarter 2 overall monthly active users were 428 million. And this is broken down into the following. Activision had 125 million. And if you guys don't know, Activision, the major driving force here is the Call of Duty platform, the Call of Duty franchise. And especially right now with Warzone, which is the new that new Fortnite style game. I forget what they're called. Then we have Call of Duty Mobile as well. In Blizzard, we have games like World of Warcraft, Hearthstone, Overwatch, and StarCraft, and Diablo. Then we have King Digital, and this is one that a lot of people always get surprised to hear. Activision also owns King Digital, which is one of the leading apps right now and has been for such a long time, which is Candy Crush, right? Candy Crush is one of Activision's actual game, and we can see that's where most of that's over half of their active users. And the way they collect money in things like Candy Crush is they have some form of advertisements, and then they have the in-game products that they can sell. Remember, this was 428 million for Q2, and this beat as the expectations were 407 million. So we can see the gaming industry is doing a lot better than analysts were expecting. I was actually just doing an Amazon video last week, and you can kind of see where analysts are being over bullish and a little bit under bullish. And thanks to Amazon's video last week, I'm glad I did it. And we actually see it today with FSLY's earnings. In that video, I mentioned how it seemed that analysts were a little too over bullish in the clouding market, and the reason I got that from Amazon's earnings is because the analyst expectations for AWS, which was Amazon's clouding, was way too high and did not beat what was expected. But they weren't as bullish on e-commerce, and e-commerce blew expectations. So that to me told me, hey, Jose, clouding companies right now might be a little bit too overestimated of what they're going to do. At the end of the day, that's not a bullish or bearish thing. It's just going to make the whole market a little bit more volatile. And we can see right now with this growth in monthly active users, we can see that analysts were also not as bullish as they should have been for the gaming industry. But at the end of the day, we still saw a drop in Blizzard's, in Activision stock price. So I guess a lot of people are wondering what happened there. But if we take a look in the past 6 months, it's not that down. It's down only 2%. That's not a big drop, especially in the past 6 months. It has returned over 43% to investors. Some other news coming in from Activision is their bookings, like I mentioned, their revenue grew about 72%. And when companies, especially if you might be new to looking at video game companies, they call their revenue bookings. And what bookings are all the sales that they've made this quarter. So for example, if you pre-order a game now, it gets charged. If you pre-ordered a game now, let's say there was a game coming out for Blizzard, Activision, for Call of Duty, or for World of Warcraft. If you pre-order and purchase that game now, even though that game doesn't come out till let's say a year from now, that you already paid for that, so that net booking is gonna go now. It's not gonna go when the game comes out. So I just wanted to make sure you guys understood that net booking process. And mostly, I think all video game industries do that right now. I know EA Game does it, and I know Take-Two Interactive also does it too. Two that I follow very, very frequently as well. So the first thing they mention is just the whole Call of Duty franchise has been doing amazing. Blizzard did an amazing job earlier. A few months ago, they released Call of Duty Mobile, which was their first free-to-play mobile type game, and it did amazing. They're seeing strong sequential growth in engagements and player investments, and they're also doing Call of Duty, Warzone, which is that one that's competing with similar games like Fortnite. And that net bookings more than doubled from the last quarter and came nearly 5 times last year's quarterly total. So we can see whatever Activision is doing right now is working really well. And they're going to start using this method. Again, this method is something that they've only done for about 6-7 months. But I am sure they're going to start using it in their other franchises. And they're probably learning a lot right now. And that to me is very bullish for the company. And like I mentioned, right, one of the major things, even myself, I was worried, is like, yes, after the pandemic ends and everybody is back to normal life operations, how is this going to pull back, have the pullback effect? And Activision is actually pretty smart. Right now, they know that most of their customers are at home, so they're just purchasing their games. But later on in the year, so in the second half of the year, they expect to launch major new content into key franchises to allow those people that have just gotten into the game to come back and continue to play that game. So to me, that's pretty impressive, and that's pretty smart, right? Right now, instead of them, they're just updating. They're doing small updates, releasing small content to have players come in. But once things start to open back up, they're gonna reel them back in by releasing new major content, and that to me is a pretty smart business move. Next, let's take a look at their guidance for Q3. They're guiding bookings of about 1.6 billion, 1.65 billion dollars, and that is above estimated 1.4 billion. So they're doing better for Q3. For full year, it sees booking of 7.26 billion dollars, and again that beats expectations, which was 7.2 billion. So to me, I'm actually I'm wondering why this drop. We don't see as they overshot, they destroyed expectations for the quarter, and they're gonna destroy expectations for the year and for the quarter. And this to me, I mean, obviously has taken a big round, a big rally up this stock. So a 2% is not that much of a drop, but still, I would have expected after results like this for the stock price to actually be up. But sometimes it takes some time, right? Some important news for Activision. This came out today, August 5th. They did mention that they're going to take out new senior unsecured notes. And this is, if you guys don't know what this is when companies they take a loan, and pretty much with unsecured notes, it allows, if they don't pay back this loan, these notes can be converted into shares. Most of the time, the companies do pay back these loans because they don't want to liquidize their shares. But what ends up happening, and what we're going to see, is Activision has had the same amount of debt for such a long time, and debt right now is pretty cheap. Right now, there's no information on the price, on how much money they're going to take, on the interest rates they're going to take, or anything else, the term they're going to take. But they do mention that they're going to use they're going to take out this loan to just pay off some other loan that they have. Right now, they have a loan that's 2.3%, and that's due on 2021, and another one that's 2.6%, that's due on 2022. And to me, this is smart move. This is how smart money works. So these are very low interest loans. So to them, it's kind of like free money. So what they're doing is they're going to take out a new loan at very low rates. I wouldn't expect them to be any higher than 3%. They're just they're gonna use it to pay their debt and then just extend that timeline. And right now, with we're gonna see this company has plenty of cash, and they're just using this debt to just have a healthy amount. All right, so next let's take a look at what they mentioned in their earnings call transcript. I wanted to take a look at some of the questions that analysts had for Activision and their team. And the first thing was, hey, how are you guys what do you guys think is going to happen after everybody's going back to work, everything is being lifted, and people are living normal lives? So Activision, one of the response was something similar to what I mentioned. They're going to start releasing new content later on throughout the year to continue to drag people in. But the second thing is, many people right now are working, are enjoying the games. And usually when you enjoy a game, the chances of you coming back to it is pretty likely. It's likely. So what they're hoping right now is that the people playing right now are getting to understand Call of Duty's franchise, or Activision's franchise, and become familiar with all the different style of games that Activision has. So they're seeing new members coming to their games, into the different games. And eventually, when things go back to normal, they're still going to play their games. And to me, that's something, I don't play much games, right? Right now, doing all these YouTube videos and doing my real work and everything else, all of this, I barely have time for games. But I used to be a very avid player of video games, especially for Activision's games, mainly in their Blizzard catalog. So even though I still don't have as much time, I still go back and play from time to time when I do have time, because it's something familiar to me and I don't have to go and look for a new game. So to me, I enjoy that, and I think that's what they are going to see right now. They're seeing a huge new load of customers coming in. Obviously, not all those customers are going to stay, but some of them are going to come back. All right, so now let's take a look at their earnings presentation. A lot of the information here I've already highlighted, so I only taken the important points, but some of them I've already mentioned throughout the episode. So I'm just going to talk about the things I haven't mentioned. The first thing is Activision is releasing a new Tony Hawk pro skater. So that's going to bring a lot of people who played Tony Hawk in the 90s, in the early 2000s. So that's going to bring new games, and that's going to come out for the consoles. And I'm not sure for PC, but we're going to see them on like PS4, Xbox One. They're also going to do a type of Crash Bandicoot franchise. They're going to come out with some more games for that. So these are very nostalgic games that are going to bring a lot of old heads that played video games back into it. And again, more customers that are going to come back and understand what Activision's catalog intends to have. In the Blizzard platform, they're going to do more games as well. For example, World of Warcraft, they are going to release a new expansion. In Hearthstone, they are releasing new content there. And Diablo Immortal is going to be a mobile application game of their Diablo franchise, and it's in partnership with NetEase. NetEase is also a public traded company. It is a Chinese-based company. I am long in them, mainly because they have great partners like Activision. And if you are partnered with Activision, it means you're doing something good. So NetEase, that's ticker NTES. And right now, they're due to expand internal testing within a company playtest in the upcoming weeks. So that's moving fairly along right now. All right, next, what I wanted to do is break down revenue within the segments, and we can see, like I mentioned, Activision Blizzard has three major segments: Activision, which has the Call of Duty; Blizzard, which has games like World of Warcraft; and King, which has the franchises. Right now, we can see the major growth is coming from Activision, and that's due to that Call of Duty. That made up about almost $1 billion of net booking, and that's up 270% compared to the same time last year. The operating margins here are almost $600 million. Next, let's take a look at Blizzard. Blizzard has $460 million of revenue coming from Blizzard, from their sales there, and that has an operating margin of about 44%. King, on the other hand, has $553 million of total revenue and has an operating margins of 38%. And this is pretty cool, to be pretty impressive. The first thing I want to mention is, back when I first started looking at Activision, King used to be a major money maker for all of them in regards to how Blizzard and Activision were looking. But look at them now. Now Activision is higher than King, and Blizzard is also higher than King in percentage of operating margins. And that, to me, is showing me how Blizzard is really focusing on their Activision and Blizzard platform. And next, I already talked a bit about their guidance of the values they give, and we're seeing that it's a lot stronger than what analysts were expecting. And this, to me, is, I don't know why I didn't think about this earlier, but if you guys have seen all my other Activision videos, and I think I probably have I have done at least 3 to 4 Activision videos for the past 4 earnings. And this is the first time Activision, every time they give guidance, they are always very conservative with their guidance. So for me to see that they're beating analysts on guidance right now, to me, I don't think they're changed their ways. I still believe they're being a bit conservative on their guidance right now, and that, to me, is a very bullish sentiment for Activision. All right, so the next thing I want to take a look at is some of their financial documents, and after we get done with that, so we're going to take a look at their income statement, and after that, we'll take a look at their balance sheet, and finally, my thoughts on the game, on the stock right now. So this is one reason I'm a huge fan of software companies, because look, as their total revenues go up dramatically, their total cost of expense usually remain pretty flat. So the more customers you grab, the more money you're gonna make. And we can see, right, they increased their total revenues by about $600 million, but total cost only increased by not even $200 million. So that, to me, shows me that this is a really strong software company, and I'm liking this growth happening here. That's the only thing I really want to mention from their income statement. Also, Activision is one of the few, I think it's one of the few companies that I own that pays dividend. All right, so now let's take a look at their balance sheet. And if you guys have been watching my channel, this is my favorite document to take a look at. So first, let's take a look at total current assets. This company, let's just start off with cash and cash equivalents. In about 6 months ago, they had about $5.8 billion of cash. Now they have about $6.4 billion. That's a nice increase there. And that's the major increase of total current assets. Their total assets right now are sitting at about $20.2 billion compared to $19.8 billion 6 months ago. Most of that coming from that increase in cash and cash equivalents. So they increased their total assets by about $600 million. The last thing, when we take a look at total liabilities, what we want to see is either a decrease in total liabilities, and if there was an increase in total liabilities, we want to see it to be not as high as total asset increase. Total liabilities right now is 6.5 compared to a year ago of $7.7 billion. So there's an increase in total assets and a decrease in total liabilities, which to me definitely shows strength in this company's balance sheet. They do have a very, very strong balance sheet. They have pretty much enough cash to pay off their total debt. And out of their total liabilities, close to 1/6 of that total liabilities is deferred revenue. And deferred revenue, if you guys don't know, it's, let's say you pre-order a game, you have yet to receive that game, but you already paid for that game. Obviously, they're going to come out with that game, but until they come out with that game, that revenue is considered a liability because they have yet to produce the product for you. But once they produce those games, that revenue is going to go back into the cash flow statement, and things are going to look really well. So in reality, their total liabilities, if we take off deferred revenue, is about $5 billion. So even if they pay their total debt with all their cash, they still have cash left over. What I am expecting, I wouldn't mind seeing Activision acquiring some more small firms, but at the same time, right, they do mention that they right now really only want to focus on their major franchises. And next, let's take a look at their total long-term debt. Like I said, this company has long-term debt that has very low interest. So for them, it really doesn't matter if they pay off. It's pretty much free money at 2.6%. And right now, they're going to use the unsecured notes that we saw earlier in this episode to just push this debt later in time. So they're pretty much just refinancing, remortgaging their debt. All right, so now my thoughts on this company. Let's take a look. Let's just go back to the stock price. So Activision to me is one of my favorite esports game, esports and video game. Activision, if you take a look at the overall esports market, especially right now in the United States, if you go to Twitch, all the big tournaments are either, for example, Hearthstone. Actually, right now they are partnered with YouTube. So YouTube is the only one that has the rights to play all their tournaments. And we're going to see Call of Duty is a big thing. They have the Call of Duty League. They have the Overwatch League. Hearthstone is really big here. So I do believe Activision is one of the few video game companies that is really going full speed at this esports, which at the end of the day is going to bring more audience, more customers to them. They have a very strong balance sheet. They're showing very strong results on their earnings. They have very strong guidance for the upcoming year. So yes, to me, Activision, I am a long-term holder. At the moment, by no means, I am not going to sell any of my shares. I am liking how things are doing. And for me, I dollar cost average all my purchases. I put money in the market every week. Very small, right? It's not like I put a huge chunk every week. I put about $400, $500, $600, and that I split among my other positions. So I only add little bit by little bit, and at the end of the day, I end up with bigger positions. So that's how I'm gonna do with Activision throughout these weeks. I do believe I'm going to add into Activision. And right now, most of my episodes right now, I might have mentioned the same thing because these are companies I usually hold, but there are some companies that I'm going to say, no, I'll pass. For example, Apple was one that I skipped, not for any bearish reasons, just not a company I personally want to invest in. So I hope you guys enjoyed today's episode. Like always, take care, have a good night, and see you next time.